So one of my early mentors in the business of trading and investing once told me that the best opportunities will happen when a bunch of things come together in terms of a confluence. So whether that is something fundamentally, something structurally, and something technically, or even within these three different ways of analyzing if things happen together. And right now, what I'm thinking is that we've had a strong relief rally due to some investors looking to the other side of what might happen as we come out of this economic recession, hopefully, eventually. And also, of course, a lot of stimulus that we've had from central banks and governments. And so we are thinking, however, though, that as the economies are slowly starting to open up again, we're going to get another reality check. And we're probably going to see some retracement lower again in risk assets, including equities. So that's the structural point that's coming together, and maybe even the fundamental perspective. So let me show you guys a couple of charts where all of this is lining up with all the same pattern on different parts of the equity market. So the first one here is looking at something called the Russell 2000. That's small cap stocks. And you can see, if you pull back this chart far enough, you'll see we've reached an important area that used to be support. We used to be resistance, then it became support, and now it looks like it's becoming resistance again. But really importantly, you'll notice that this sharp move to the upside we've had in risk assets over the past few weeks may have only taken place within the confines of a bearish sort of pennant or bear flag pattern, whatever you want to assign to this pattern. And it's also matching up more or less with that yellow line, this one here, which is your 50-day moving average. Now, let's look at another one. Let's look at, for example, the KRE. This is the regional banking stocks. KRE is the ETF. And you can see rather similar to what we just showed you before. We broke a lot of trends here, and we're now reaching that 50-day moving average, again, the yellow line, within the confines of, again, this kind of bearish flaggish kind of pattern, which is this one. And these patterns will if they trigger, would indicate that we would see kind of a move like that to the downside over some period of time. Now I have a couple others I want to show you, but just real quick, I want to let you know about the Extreme Market Conditions Summit that's coming up. A bunch of us are speaking and presenting some strategies around the current extreme market conditions. I certainly think we're not going to be out of this extreme environment anytime soon. I think the markets are going to react differently. We're going to have to adapt our strategies. And so sign up for this thing. It's free. I would highly encourage you to do so. You're going to learn a bunch of strategies. And you can sign up down below or in the link if you got this by an email. So I'd love to have you on board. It is a multi-day event. You can show up at any point in time. I'll be listening to some of these speakers, of course, as well as presenting. So show up for that. Love to have you there. So we've talked about a couple of patterns: the KRE, the SMH, right? Semiconductor stocks, regional banks. But that's not the only. Actually, no, we haven't talked about the SMH yet. That's the next one I want to show you. So this is now semiconductor stocks. Now you can see pretty similar situation here. We broke below trend. We're now rallying within the confines of this very sharp sort of bearish flaggish pattern kind of pattern. In this case, we've overshot the 50-day moving average. Not surprising, because this is a part of the market that's a bit more algorithm based and has a bit more hope in it. So not surprising we're overshooting that, but nonetheless, we're reaching an important point in terms of, again, where we are on this pattern and also the lower end of what used to be the trend. Let's look at one more, and this is the industrial stocks. And you can see, again, very similar pattern here. We broke below trend, which is this little support line here. We are rallying right to the 50-day moving average within the confines of this bearish pattern, bull, whatever they call it. They're all sorts of, not bull, it'd be bearish. I think they call it a pennant or rising wedge or something like that. Whatever. It doesn't matter what they are. They're consolidation patterns, in my opinion. And if this triggers, again, the point would be that this would resolve to the downside. So I just thought I would take a few minutes and show you guys, what I'm seeing here, where this is lining up all these patterns, and you can look at a lot more different ETFs or equities. A lot of them look very similar to what we are right now. What I showed you here, and it's lining up with that structural backdrop that I just showed you. So hope this has been helpful, and again, make sure you sign up for the Extreme Market Condition Summit. Look forward to having you guys there.